Hey everyone, welcome back. I'm Jeremy Szafron. All right, now the silver market is telling two completely different stories right now. The paper price, according to the latest COMEX data, is telling a story of confusion. After hitting a 14-year high, silver futures are pulling back to the $41 mark. Now, this move is being linked to conflicting signals on the U.S. economy and the U.S. dollar momentum. According to the Labor Department, weekly jobless claims came in better than expected at 227,000, suggesting strength. Yet, that report directly contradicts the latest data from the ADP Research Institute, which showed the private sector actually lost 54,000 jobs, a clear sign of weakness. But then we talk about the physical market on the metals and the world of real bars and coins. It's telling a different story of a deep and persistent supply deficit. So my guest today believes this is the real story, and in an exclusive communication to me, he warned of a potential price shock of $5 to $30 very quickly. Today, we investigate that warning. Joining me now is the man who sent that email, former chairman of the Silver Institute and longtime CEO of Hecla Mining, now advisor to San Cristobal Mining, Phil Baker, joining us now. Thanks for being here, Phil, making time just before Beaver Creek. Busy, nonetheless.
It is, and thanks for having me on.
Yeah, of course. I want to start with that email. We were chatting during the summer, and it was, a little bit of sideways action on the prices. Obviously, everyone's back to work now in September. Let's start with that recent trip. I mean, you were just on the ground at the Perth Mint in Australia. What did you see there? What's the view on physical demand from one of the world's most important mints?
Well, it was pretty remarkable. What they said was they've had more demand over the course of the last 5 years than they have ever experienced in the history of the mint. And they even have trouble getting supply from the smelters for producing their coins. So and the commemorative coins was really remarkable to see all of the interest that there is in silver.
Yeah, interesting. And I know that they put out some numbers too, and they were reporting that their gold sales were kind of surging. Silver's fell a little bit to an 8-month low in August, but I mean, is this just the prices? I mean, what do you think about this demand?
Looking at a longer term, right? So month by month, things change, and it's not necessarily really meaningful for the long term.
Yeah.
Because what they've said in the long term is that they've had to continue to increase the size of the facility. It was really quite remarkable. I hadn't been to the Mint in quite a long time, and the expansion that they've done of that facility reflects this demand that you have for the precious metals and particularly for silver.
That makes sense. And, during that visit, you also were just talking a little bit about there, but you discovered that fascinating supply chain link back to your former company, Hecla, and San Cristobal, who you advise now. How tight is the physical market when you concentrate, when concentrate from Americas is needed to satisfy that coin demand on the other side of the world?
Well, it just shows you that this demand is insatiable. And you particularly see it in the three areas, the three main drivers of silver demand, which are industrial demand. So you've got to have the metal to go into the photovoltaics. You got to have it to go into the electric vehicles. You got to have it just for all the silver contacts you have in all the different applications. But then you have this demand for silver for physical. And it really comes into two places. It comes in people buying bars and coins and silverware that you have in India. And I think, previously we've talked about silverware and how that is a market that I really did not appreciate how significant that was in India. It's really more art that their people are buying, and it's just continuing to grow. Particularly the physical demand is growing, and as a result of that, you have this big deficit in the silver market, this ongoing deficit. We're now in the 5th year of that deficit.
Yeah, interesting. Okay, well, this it's kind of on the ground view seems to confirm that data that you and I talked about for months. I mean, we had you back on in July. I think you and I were at Quebec City, and you stated that the world hit their the peak silver production back in 2016. Let's talk about the mechanics of that. As someone who runs mine, I mean, just how real is that supply constraint?
It's very real. Silver mines are small. It's very difficult to have a silver mine that's of size. The largest silver mines are actually not silver mines at all. They're actually copper mines. It's a 40 million ounces. It comes from the very largest mine. It's a copper mine in Poland. But if you start going down the table of the largest mines in the world that produce silver, you quickly go from 40 million down to about 15, and then you go from 15 down to close to 3 million ounces in the top 30 producers. So as a result of that, there's not the ability to scale up silver production. And in fact, if you look at silver production over the course of the last decade, we reached peak silver production in 2016. And it's, we're not going to see that level of production anytime soon. You've got all of the difficulties of putting a mine into production from a regulatory standpoint, from a construction standpoint, and then the fact that the mines themselves are produce so little silver.
Yeah, I'm curious. I mean, you quantified the deficit as kind of, what was it, 800 million ounces over the last 4 years, last time we talked. Why is this deficit more persistent than previous cycles, which you've seen before? I mean, you've certainly been through the 2008 crisis. I mean, you ran Hecla during it. Is the supply side of the market fundamentally broken?
No, well, it's really the increase in demand. Yeah. That has really been the reason why you have this deficit. And what has driven that increase in demand? Number one, it's been industrial demand. So if you go and you look over the course of the last 25 years, then industrial demand has more than doubled. Notwithstanding that photographic demand went to zero. And at the same time, the mines are not able to keep up. You have roughly demand of about 1.2 billion ounces, and you have supply from the mines of about 800 million ounces. So you've got this deficit of 400 million ounces. Recycling puts in maybe 150 million ounces. So it puts a little bit in that gap, but it doesn't fill the gap. And so as a result, you have this big deficit, and it's just going to continue. And it's particularly driven by this. Now it's being driven by this physical demand that you've had over the course of the last 4 or 5 years. Yeah. The amount of silver that people are taking in bars and coins.
I want to talk to you about that one side of the demand too a little bit more. I mean, as the former chairman of the Silver Institute, you've seen the global consumption data more than most. I mean, are the major industrial users like Tesla, like the solar giants, are they behaving in a way that confirms this deepening shortage?
I don't think they're doing that yet, but yeah. I think you're going to see that. One of the things that's been in the news is the critical minerals, silver being a potential critical minerals in the comment period that is available. What I think is going to happen is that silver will be considered a critical mineral, and as a result of that, people like Tesla, people that are demanding the silver, are going to have to rethink how they manage that silver. They're not going to be as short silver as they have been in the past. They're going to want to make sure that they have access to the silver.
What does that look like? How are they going to bypass that? I mean, are they going to try and get this direct?
Well, it's possible. You certainly see some of that occurring with some minerals, and that's certainly possible that could happen with silver. But I think more likely, they're just not going to be short. Frankly, what they have done up to this point is these industrial players have not needed to have an inventory of silver. There's been plenty of silver available, and there is plenty of silver available. It's just a question at what price people are willing to sell that silver.
I got to ask you, I mean, I'll present the counter argument, right? I mean, the recent report from the U.S. Federal Reserve, the Beige Book, described economic activity as having little or no change. And I'm just curious, the only reason I bring it up is because the world's largest economy is kind of stagnating. Doesn't that logistically lead to a cooling of the global industrial demand, or do you think this is kind of a head fake?
No, certainly could. Yeah. But the long-term trend is not going to change. You're going to continue to need silver for all of the industrial applications. We're going to continue to build photovoltaic cells. We're going to continue to make electric vehicles. We're going to continue to have, computers like this, that, where we're having this conversation. That is not going to change, and it's going to continue to grow. And particularly in the developing world, as their economies, their lifestyles become more like the Western world's lifestyles, they're going to actually consume more silver.
Yeah. I wonder, it's pretty interesting, that human factor, which seems to kind of defy those traditional economic models. I mean, this whole case about the physical buyer is different, that they're really holding here, not selling. I mean, talk to me a little bit about this. Do you think that when do you think they'll profit take? I mean, do you think that this is a long term?
So it is very interesting to look at the physical buyers of bars and coins. And the Silver Institute in August put out a new report on this, and it's a comprehensive report that looks at the last 15 years of demand for silver in terms of coins and bars. Interestingly, the U.S. is by far the biggest consumer of bars and coins. Over the course of the last 15 years, it's been about 1.5 billion ounces that has been consumed. Where does that silver go? It goes largely into depositories. A significant portion of it goes into IRAs. Interestingly, those IRAs, in the past, people would put silver into their IRA and they would be done. They wouldn't add to it. Now they're adding to it, and they're continuously adding to it. And then the second thing that's happened is that frequently when someone would pass and leave to their heirs their silver, the heirs would sell the silver. And what appears to be happening is those heirs are retaining that silver. So it has become a long-term generational sort of asset that people are retaining. So that 1.5 billion ounces that have gone in, then it's still there. People are not selling those ounces in any great degree.
So they're using the IRA to get exposure. What is it? Just for tax advantage, kind of? Yeah.
Yes. IRA is for non-U.S. people. An IRA is an individual retirement account, and it's a pension product, pension program that the U.S. government has had in place for a better part of 50 years now. And so silver has been allowed to be in a product that's invested in an IRA.
That's so interesting. I mean, couldn't one argue that a silver IRA with its reliance on custodians and depositories is just another layer of paper between an investor and their metal? I mean, if the systemic crisis is about to happen, would the IRA holder be better off than holding someone in an ETF?
Well, but they have the physical, and they have the deposit in a vault. That they have assurance that it's there. These depositories are very, very careful to make sure that each of these deposits are specifically allocated to that particular person.
Yeah, what a time, huh? I got to ask you, I mean, the Kitco News audience. I mean, we've been talking about this a long time, and our audience has a very long memory. They've seen this movie before, right? They remember the run-up in 2011 and again in 2020, 2021. Sure. Both times silver looked ready for that historic breakout, only to fail and frustrate these investors. Speak directly to them. I mean, what fundamental factors exist today that wasn't present in those previous failed rallies that makes you believe this time might be different?
Look, you haven't had 4 years of continuous deficits, number one.
Yeah, true.
Right? That is a big, big difference between where we were in 2011. Secondly, the growing demand that we've had, this 1.2 billion ounces, is significantly larger than what we had back in 2011. And you just have people that are retaining their silver, which you didn't have at that time. It is a very different time than 2011. And interestingly, yes, you've seen silver go up, but it's gone up. Over the last 2 years, it's gone up in a similar way. I think gold's up about 1.7 times, silver's up about 1.6 times. So it is trending with gold. It's in a very similar place as gold.
Interesting. I got to ask you too. I mean, let's look at the producers. Silver mining stocks have recently started to outperform the metal. I mean, as a former CEO, how do you interpret this move? Is it a leading indicator? Are you a little bit worried about how quick it's going? What are your thoughts here?
Now, look, I think it's really a catch up. If you look at the silver producers, they have not performed the way the gold producers have. So it's more of a catch up. It's very appropriate.
I know you're with San Cristobal, and we can talk a little bit about that. I'm also curious. I mean, you've had your eye on this market a very long time. Any silver miners, any juniors, anything you're looking at right now that our audience is always looking for some takes on what they should be watching?
Well, look, I'm not going to comment on particular companies as a member of the executive committee of the Silver Institute. I'm not going to go there,
but it's a bullish time to be in the industry, I suspect.
And it's going to continue. And it's going to continue to be. And look, I really would encourage people to take a long-term view. I started in the silver specific industry when the price of silver was $4.10. Mm-hmm. So we're now seeing it 10 times greater. Interestingly, if you look at gold, it's gone up about 15 times from its low. I think silver will continue to, generally speaking, outperform gold, and get closer to a gold silver ratio that's probably in the range of 60 to 70. That seems to be the place where the market thinks gold and silver should be over time, and so it's going to work its way there, and that would suggest a silver price that's going to exceed $50, assuming gold continues at the sort of levels that it's at.
Yeah, well said. And I mean,
that of course is higher than the all-time high for silver, and I think it will go even higher than that. At some point, you are going to have this steep increase in the price of silver, and how high that goes, nobody knows. But it's going to definitely be significantly higher than the $50 that we saw in the past.
And it's interesting when you talk to some of the silver bugs too. I mean, obviously we've had volatile prices on the gold front and it's been moving very quickly. But if you look at the history, silver has been too. It's just at a lower cost. So I think it kind of confuses people there a little bit. Why didn't it go as much as gold? I mean, it kind of leads the most dramatic part of your forecast. I mean, you predicted when we talked a few months ago that jump of $5 to $30 could happen very quickly, and it did. I mean, we were sitting around 30, 32 for a very long time. We're above 40 on the spot side, but it does sound more like a system failure than a rally. I mean, what's the specific tripwire that forces the paper price to violently surrender to physical reality here?
Look, there is a relationship that continues between the paper and the physical price. Mm-hmm. If you look at, you have things that affect it, that affect one that doesn't necessarily affect the other as greatly. For example, the tariffs. What was going to happen with the tariffs? You saw a lot of silver having to move from London to the U.S. That silver continues to sit primarily in the U.S. You have significantly less silver than you typically have in the UK, and that, of course, causes the paper market to perform in a little different fashion than it would do. And you also have lots of demand that's coming out of India that's taking supply from the UK and sending it to India. It's remarkable how strong the Indian demand is. We are at all-time highs in rupee terms for silver, and yet that demand continues to be insatiable.
Interesting. We talked a little bit about that at the show. I mean, on the Indian side, because you were just returning from that trip, you showed me some photos. I mean, beautiful things there. Is it a matter of still just gold prices being at these levels that those consumers that don't have the cash are looking towards this metal instead?
There's certainly some of that.
Yeah.
But you do have high net worth individuals that also want to invest in silver. Interestingly, they maybe invest in silver for a different reason than they invest in gold. In gold, it's really a store of value. In silver, there's an element of the volatility of silver being attractive to them in order to generate outsized returns.
It's an interesting kind of analysis. So what did you give me? You gave me $50, probably higher. I mean, last time you and I talked, you said this could be an interesting world of even $80 silver. Do you think that that's still a thing?
Yeah, no, that's certainly possible. Because you're going to have a spike up at some point. And I'm just not willing to say when that's going to happen, but you will definitely have a spike up. The deficit makes that spike going higher than one might expect.
Yeah, I was going to ask you. I mean, you've obviously been around for a moment. I mean, you started focusing on silver in what, 2001, when the price was, as you told me in June, just $4.10. I mean, after all these years, what's the single most important lesson that you've learned that you can share with investors listening today?
I think it's really having patience and staying the course. There was a lot of properties that went by the wayside in those days, and people did not do what needed to be done to maintain those properties, and the cost of restarting them is very, very, very high. And what that means is that the silver price has an opportunity to run outstrip maybe where you would expect it to run, but you got to be patient. This is not a game for a really short-term view on the price. It takes time, but when it happens, it moves dramatically, and you've seen that just in the last month.
Yeah, and from a pure macro view, I mean, I got to ask you. I was just talking about this comparable data. We got some jobs numbers over here, ADP over here. I mean, let's talk a little bit about a moment everyone remembers. I mean, you steered Hecla through the 2008 financial crisis. I mean, is the systemic risk that you see in the silver market today comparable to what you saw in the broader financial system then? I mean, is a black swan event in physical metals more likely now than a banking collapse was in '08?
No, I don't think so. Look, the risk of silver prices going down dramatically is pretty remote. You've got to have really a financial crisis that is broad based. You've got to have the industrial demand, just dissipate. You got to have investors having to liquidate precious metals in order to cover their shortfalls other places. But should all of that happen, then of course what happens is the precious metals move in a much more dramatic fashion upwards than anything else. So the downside risk seems very, very low, to me.
On the miners side, I mean, are we in a kind of secular move? Do you think this is going to last a long time, both for gold and for the silver miners?
Yeah, look, all of the things that cause gold to be attractive, right? You've got, you just had the summit with the Russians, the Chinese, the Indians, and a bunch of other countries. That's troubling. You have the war in Ukraine, you have Gaza, you have tariffs, you have, the things that are happening domestically. All of this is positive for gold, and maybe unfortunately, but it is positive for gold, and therefore it's positive for silver. You don't have those things that will drive the silver price down in any dramatic way, in the same way you have it that will drive prices up.
Yeah. And then you got, the Fed, you got some of these political actions. I mean, if they cut, and we see, right? I mean, it still seems like there's a pretty bullish case here.
Yeah, it's hard to envision, lower prices in a dramatic fashion. Now, having said that, could the metals prices go down 10 to 20%? I think that's certainly possible. Unlikely, but it's not going to stay there for long.
I got to ask you about San Cristobal. I mean, obviously you're advising them right now. Are they excited about these prices?
Absolutely. They have a mine that's been in operation for, I guess, the better part of 25 years now in Bolivia, and they're continuing to find more metal and continuing to extend the mine life there. And they're one of the largest. I think they're the 7th largest silver producer and maybe 8th or 9th largest zinc producer as a mine. And so they're doing quite well, and they're being very supportive of Bolivia.
Yeah, and now we see that there are concentrates traveling across the world to meet demands in places like Australia too. I wonder how long will this continue for? I mean, we don't have a magic ball here, and we talked about those prices. But to wrap it up, I mean, is it a $50 year?
It's the timing of reaching that sort of level. It's I'm not going to speculate, but
Yeah.
the fundamentals are there for it to be at that level and higher for years to come. And it's been great that while people view this as a rapid rise, it's generally speaking has been, relatively slow over the course of the last sort of 10 years. This measured increase. I mean, if you look at the metals price, it has built a base that is, certainly above $30.
Yeah.
And it's, so should it fall, it's not going to fall very far, and it has the opportunity to go significantly higher.
Yeah, and I know we're only a few days into this $40 range, but it's been tight. I mean, it looks like it's got some pretty good support. I appreciate this, Phil. I hope it's a great one over at Beaver Creek. Going into a conference like that, I mean, you're talking to some of these miners. What are the biggest things now? Are they buying some ounces in the ground, or they're new, explorers out there trying to find the next play? What's the theme?
Yeah, I think the biggest thing is that there's access to capital for the explorers that you just didn't have a year ago. And I think that's going to be the most interesting thing, is these guys getting capital, being able to do the basic exploration that needs to be done to find those next deposits. And for silver, it's critical because there's been so little exploration that's been done over the last 30 years. So real opportunity to see new deposits, see new mines. Of course, it'll take a decade or more to see mines go into production, but real change in the potential for the future of the miners in silver. Yeah,
still a long-term play, and the people that we have on that actually know the industry like you all tell us the same thing, so we should be listening. Phil Baker joining us today. A truly powerful and data-driven look at the forces kind of at play at this global silver market. Appreciate your time.
Okay, thanks, Jeremy.
Thanks, Phil. Appreciate it. All right, we presented the evidence and the counter arguments. Now you be the judge. Is the silver market on the verge of a historic repricing, or will the paper market remain in control? Let us know your verdict and price target in the comments below. And of course, if you appreciate this kind of in-depth journalistic analysis, make sure to subscribe to Kitco News and hit the notification button so you never miss an update. I'm Jeremy Szafron. We'll see you next time.